the Kobe and LeBron level talents are hidden behind the doors of proprietary firms.
Lance Breitstein, the #1 trader at a tier 1 prop firm in back-to-back years, nicknamed Legend due to his unbelievable trading prowess.
Lance has had a massive year, over 8 figures in trading profits in 2024. Not 10 million, not 20 million, even much more. Trillium, long-standing firm, they verified you. Also Kinfo, third party, verified you as well. We saw your lifetime P&L at Trillium. You clearly understand fundamental advantages that you can continuously exploit over and over. Most traders, when they start, they learn about chart patterns, candlesticks, support and resistance. But you've pointed to something that's more fundamental to understand.
Trading is essentially two things. Can you accurately estimate expected value? 2, are you betting appropriately?
So you made 8 figures in 1 week this year. So I'd like you to break down that setup, just from selection, idea generation, down to the entry.
One of my big specialties is what's called...
This isn't just the average Eval trader or Furu out there. Today, we're gonna have a masterclass. Welcome to another podcast episode of The Way of the CPT. We have a special guest for you today. In the trading space, generally, the Kobe and LeBron level talents are hidden behind the doors of proprietary firms. But our guest today has graciously, after retiring before the age of 35, he's come out to the public space and he's provided insights to the retail trader, the independent trader that will transform the next generation. Now, his accomplishments are often understated because there's no public scoreboard for us to look at. When we look at the LeBrons and the Kobes, we can see their stats. But today, I'd like to thank him for joining the show. When I think about the Market Wizards books that I read when I first started off, think about the legends, and standing or sitting across from you makes me feel like those stories are coming true, man. So thank you for joining us. Thanks for coming back to the podcast. I look forward to having a great conversation.
My pleasure. We killed it on the first one. People loved it, so you got to give the people what they want.
Yep. So let's start off. We had a lot of doubters in the first podcast in the comment section. They doubted that you were verified. Trillium, the company, long-standing firm, they verified you. Also, Kinfo, third party, verified you as well. And before this podcast, you logged in to your broker. We've combed through your realized P&L for the year. And I can say on the record that without a doubt, Lance has had a massive year, over 8 figures in trading profits in 2024. Not 10 million, not 20 million, right? Even much more. So there's no room for doubt anymore. And also, on the screen, I'm publishing his lifetime P&L at Trillium, right? So this isn't just the average Eval trader or Furu out there. Today, we're gonna have a masterclass, so stay tuned and share with your trader friends.
Thank you. And I always laugh because everybody has their crazy conspiracy theories where, oh, Trillium verified him, but they're incentivized for this, and Kinfo, which I think is one of the most secure verification platforms out there. People will think, oh no, you can cheat that. Well, let's see you cheat it and get on the top.
There you go.
And now I'm sure we'll still find out Lance is bribing Abdullah. So if the conspiracy theorists want to go forever, hey, let them be. We're just going to be here just trying to share some good knowledge.
There you go. So you were #1 on Kinfo publicly, but not only that, you were #1 in Trillium, right?
Yep.
So in an intense, high performance environment, you reached the top. So share with us just like raw number P&L, as well as the internal drive. What does it take for you to reach such a high level in the trading field?
Sure. And so background for everyone, Trillium is one of the longest standing trading firms in the game. In fact, they were founded, like the family that founded the firm, they invented some of the technology behind electronic trading back in the late 90s. So as a firm, it's been around over 2 decades, and it is high-level talent there. They do not mess around. It is one of the more institutional firms in the day trading world, amazing mentorship, amazing technology. And so when you get into that environment, there's over 100 traders there. And it's 100 competitive traders that have never failed at anything in their life. So we're talking a lot of talent, a lot of experience. They have a ton of traders that have been at it 10 years plus, 15 years plus, some even 20 years plus. And to reach the top of that is no joke. I have so much respect for all the traders at that firm. A lot of them kicked my ass for many, many years. And for me to reach number one, it took me 9 years of trading to do that. And it was a very slow start. The first couple years, I made almost no money and, was hunting for sewer rats just to, keep food on the table. Once I started to do well, I just never took the foot off the gas. And so many people start to get a little lazy, a little comfortable, a little apathetic. They like going out for their nice dinners and doing all the fun stuff, and they get distracted. But for me, I was just so driven to become one of the best. And like I say, for over 10 years, I was going into that office nearly every single Sunday to study and improve my game. And so then in 2020, 2021, it finally happened where I became top of the scoreboard, crushed it, blew it out with some big 8-figure years. And then I stepped down at the end of 2021 to focus more on my philanthropic interests and take a little bit of a unplug after one hell of a career.
So most people are trading for financial stability. How did you continue after you made enough money to rise to the top or to have that? What drove you? What motivated you?
Yep. And I think you always hear about those people, those Kobe Bryants, where even though obviously he was mega successful, mega famous, one of the GOATs, and he was still in that arena, in that gym, taking basketball shots, working out at 4 a.m. You hear all the stories from Grover and everyone else, and he just had that fire and that hunger to be one of the best. And I think most people have different whys. Some people, certainly some factor is monetary, but once you exceed that, it's really a matter of how good can I be? And then not only that, when you're in that pressure cooker at Trillium with that top 10 scoreboard and everything, it was like, okay, I want to see if I can really do this. And 2020 and 2021, I'm really good at a lot of the crazy volatility, the price action. So I was number 2 or number 3 the couple prior years. I was right neck and neck, but I couldn't quite seal the deal. And there was a lot of really amazing breaking news traders in the firm. But then once the 2020 market hit, it was just price action, volatility city. Then it's like, okay, now you're in my arena. This is my type of market. And then I cleaned up.
So when you're sizing up number 2 or number 3, the guys that you're competing with, what are you looking at? Like, how are you evaluating yourself versus them?
Yeah. Well, what's so interesting about Trillium, and I guess the trading world in general, and part of what made me read Market Wizards and love the books and love trading, is there's so many ways to succeed at the game. And so most of the top guys at Trillium, they were doing a very much different playbook than what I was doing. I specialized in a lot of the big panic plays, the capitulations. Anytime things got crazy, I would really turn on the jets. But a lot of these guys had so much talent in other areas. And look, I would watch them do their game and I'd be like, damn, like some of that stuff is super impressive. Wow. And I would try to compete in that. And I think I was good at everything. Like I would do some of the stuff they were doing, but once it was my wheelhouse, I was exceptional at that. And that's the stuff that I would really go extremely huge on.
Yeah. So like Kobe, like LeBron, the Jordans, if you study them, you find that there are certain fundamental things that they understand at a deep level. And me coming through the social media space, once I started to study you in detail and study the things the concepts that you were talking about and other professional traders like you, I found that there was a very fundamental concept that was undercovered in the social media space, right? So most traders, when they start to learn, they learn about chart patterns, they learn about candlesticks, they learn about support and resistance. But you've pointed to something that's more fundamental to understand, and that is edge. Can you explain why a trader needs to understand what edge is and mispricing as well, inefficiencies?
This is important. So let's take a couple steps back. So first of all, while I appreciate the flattery, I wouldn't really consider myself the GOAT. There are at least a handful of traders that I even personally know of that blow me out of the water in just the scale of the P&L that they've put over their lives. And they're even younger than me, which is even more incredible. Like I think in day trading world, I was probably up there. There's no way to know on the global scale, but at least, I don't know, I would guess maybe a top 50 day trader. Now there's some massive swing traders out there. But I think one thing that really separated me was a really deep understanding of these concepts. And because I worked at an institution, I was also training people. So I was running the Chicago office. So each year I was doing some of the hiring, I was doing some of the training, and I had trainees under me. So that forced me to also distill all these lessons into concepts. So I think what makes me unique isn't that there's, I'm the greatest ever. Like, like people like Lucas the short bear, who you're well aware of, he dwarfs me. I'm just a little boy compared to him. And even in height, because he's so tall. But
Me too.
Yeah, both of us. But I think where I really do well is I've managed to distill a lot of these concepts so that people can learn effectively. And I've studied how people progress and get good at this game. So one of those concepts that you're alluding to now is the concept of efficiency. And if you go from a traditional finance background, there's stuff out there like the efficient market hypothesis. And so you have some very smart academics arguing that markets are perfectly efficient. In other words, they can't be beaten, which I think we know that's kind of bullshit. And most people don't quite believe that. It's more so just a theory and a framework for assessing this stuff. But I think what is true is the market is exceptionally hard to beat. If it wasn't hard to beat, we'd all be sitting here making tons of money, and that's not the case. And the people that are able to be the best and beat the market, they help make the market even more efficient. So if I'm a really good news trader and a piece of breaking news comes out and I'm hyper fast and I'm able to process that headline, I'm going to help it go to the right price as fast as possible. So I'm helping the market be more efficient. And in general, anytime you make P&L in a trade, from a conceptual framework, you're helping the market go to the price that people agree it should be at. So if people are panicking and they're losing their minds and they're scared, and you buy and provide liquidity during that panic and the market bounces, you just made all that P&L. Why? Right? Let's go back to capitalism. What service did you provide the market? You essentially allowed people to panic and provided them the liquidity to panic. And you were correct that that panic price was not the right price. It was somewhere higher. That's kind of the framework how I view these things. And so then what I also recognize is there's areas of the market that are more efficient than other areas of the market. And as we've much discussed to controversy, debate, and discussion, which is the whole point of this, I'm of the belief that stuff like Forex is very, very, very efficient. Stuff like futures, maybe a little bit less so, but also very efficient. Stocks, efficient, but even less so. You see some really wild things in the stock trading world. You see a ton more breaking news headlines. You see low floats do all sorts of crazy things. You see tickers like Tesla have amazing breakouts that then follow through 20, 30%. You're not getting any currency that's going to move 20% on a breakout generally. And where people get seduced, I think, by a lot of the marketing and everything else, is there's no account minimum for a lot of the Forex and futures. So I think people new to the game get sucked in because it's accessible. But guess what? A casino in Vegas is accessible. I can go to that casino and I can gamble, right? I don't need to have, the PDT, pattern day trader minimum to gamble. And that doesn't mean, though, just because it's accessible, you want to be doing it and you're going to make money that way. So I think a lot of people are stacking the odds against them and actually walking into the casino when they really want to be walking to the poker table where they can beat the competition.
Yeah. So let's take a step back a little bit. The term efficiency is an academic term.
Yep.
Also, the term mispricing, they can seem a little cryptic to the beginner, right? Who's only been focused on price action and volume, right? Can you just explain a little bit more about when an asset is mispriced, right? Why that particular asset may be the best for us to trade versus something that maybe their supply and demand is already imbalanced, right? So there's a little bit more unpredictability.
Yep. So really the only way you can make money is if there are these mispricings. So let's make it super simple. Let's say I want to go to the store and buy, a candy bar for $1. Although with inflation, who knows anymore? I don't eat this shit anyways. But let's say I go to a candy store and it's $1. And from every convenience store in the country, it's all priced at $1. And it's super accessible. You can buy and sell these candy bars easily. That is a very efficient market. Everyone's agreeing that the price of this candy bar is $1. Why would I ever buy a candy bar for $3 or $5 or $10 if every store in the country has it for $1, right? And so meanwhile, if I want to buy these candy bars and resell them I'm not going to make any money, right? Because if I'm sitting here with the candy bar that I bought for $1, why would you buy it from me for $1.20 or $1.50? Now we're talking about super low sums of money, so it is feasible, but like just to simplify, right? And so if we were to take even say like a car, right? Let's talk about a $50,000 BMW. If this car is priced the same everywhere, and all of a sudden you see on Car Gurus or wherever else a $25,000 BMW and it's this car, what are you going to think? Are you going to be suspicious or are you going to buy it? You're going to be suspicious, right? Because generally, most markets, even the car market, is very efficient. I can't just find a perfect condition BMW that everywhere else sells for $50K and here it's selling for $25K, right? Because people aren't dumb and that's a lot of money to leave on the table. So what happens is in stuff like Forex, you don't have as many of these mispricings. Why? Because the Forex market is so insanely liquid. There's so many institutional players and all these people, like essentially the Forex market drives global commerce, right? Like if $100 of US dollars are worth, I don't know, 150 Canadian dollars or whatever, like no one should ever, given the liquidity, trade $100 for 200 Canadian because it's just such a far mispricing. You never get stuff like that. Now, if you look at the stock market, you have low float stocks. Who the hell knows what the right price of that should be? After the Trump election, who knows what Tesla should be worth? It's really hard to say. So you don't have this agreed upon market price, and that creates times of mispricing. Or when you get stuff like panics, which we can talk about later in this episode, about the big panic that happened in Japan that I really crushed this year.
I mean, eight figures in a week.
Indeed.
Incredible.
And that isn't possible unless you get really big moves. And so the yen had a big move, but it was nothing compared to what we saw in the Japanese equity market. And so there will be times when I trade Forex. There will be times when I trade futures. And actually, my big trade was partially in futures. But you need a framework for understanding that if there's no mispricing, you can't make money. You're buying the candy bar at $1 to just sell it for $1. There's nowhere where you can sell it $1.50, $2, $5, whatever. Now, in small cap world and in stock world, you get all sorts of big emotional moves or lack of liquidity or big breaking news headlines that causes these mispricings where you do have an opportunity. That doesn't mean you're going to win or that you can capture it, but there's at least a chance. Yeah.
So we'll show some of this on the charts a little bit later. But what about the guy that trades Forex and he's looking at the 1 minute chart and he's seeing it move like from one price to another? What is he seeing there?
Yep.
He may say there is mispricing going on here.
So this comes up with a topic called noise and randomness, essentially. And so, of course, these prices are moving all day. But the question is, can you reliably capture positive expected value? And so positive expected value means that over the long run, doing that strategy, are you going to make money? I know if I walk into a casino and I do the slot machine, like I can win on any given time, right? Like each time there's a chance I can make money. But I know that over the long run, I'm going to lose. And with Forex, you'll get a lot of moves, but I would argue that a lot of it tends to be noise, meaning you can't beat it over the long run. Not all of it, though. There are specific moments in time where any market is going to have some edge, right? And so there's times when futures offer edge, Forex, crypto, whatever. I mean, crypto offers a ton of edge, I would argue, because there's so much price discovery there. Look at the move Bitcoin has made from 70K now to 105,000, right? You're not getting stuff like that in Forex. That doesn't mean there's nothing, but I would argue that overall, a lot of those price movements are random, and over the long run, you can't capture it.
Yeah, so excellent point about noise. Now, that same trader may look at the 1 minute on a stock chart, right? He says, what's the difference? Why isn't this particular movement noise versus the Forex chart that I was looking at?
Yep. Again, there will always be periods of edge in both. But I would argue that if you take a market like Forex, it's much more akin to playing a slot machine, not always, but generally. And if you look at the stock market, it's much more similar to going to the poker table. That doesn't mean you're necessarily going to win. it still takes a huge amount of skill, expertise, and you need to play the right hands. And one concept I talk about is what I call the broken slot machine. Meaning, in equity trading world, there's times when stocks are making really, really crazy moves. Stuff like you're never, ever going to see in Forex. Like if you were to look as of the time of this recording in mid-late December, there's tickers like SOUN that are making incredible moves. These stocks are doubling, tripling over a matter of weeks. We have stuff like Tesla that broke out from a really nice consolidation above 360 and has since gone into the high 400s. Like these are incredible capturable moves. And what happens is in stock market world, there's times where, again, to make the poker analogy, you're getting either pocket pairs and sometimes even aces. And that's because you get a huge amount of volatility, you get a huge amount of price discovery, meaning prices are moving all over the place. And these are making cleaner, capturable moves many times. And so when you apply the right strategy, much like at the poker table, it's not that you can win every hand, you're inevitably gonna have losses, but over the long run, if you apply the strategies to the right places, you can make money.
Okay, let's talk about structural edges.
Yep.
We saw your P&L, your career, your lifetime P&L at Trillium.
Yep.
So you clearly understand structural edges, like fundamental advantages,
Yep.
like that you can continuously exploit over and over. As we're talking to our audience, Forex traders, futures traders, stock traders, what's a structural edge that they can continuously try to exploit or design strategies around?
So this is an important question that every trader should be asking themselves. And I'm so happy you asked this, because if you're a trader and you're not thinking, what gives me edge? Why might I have edge? You should be. Because again, the market is super damn efficient. It's like, oh, why do I think I can go into the casino and beat the slot machine? You can't. And you need to think, where can I beat the game? And so in stock market world, or even just general markets, there's a bunch of structural edges. So one example is, let's say you have access to a bunch of news sources. Not every trader out there has Bloomberg. Not every trader out there has Reuters, Dow Jones, all this stuff. And there's also a zillion other websites where news breaks. News can break on Twitter. News can break in all sorts of places. And not every market participant has access to those resources. So you can have an informational advantage in that you're able to get the news faster than other people. You can also have an analytical advantage, meaning you get that news, but you're able to interpret it better. Let's say I'm an expert at biotech stocks. If some data comes out on a biotech stock, I might not necessarily be the fastest to the news, but I might be able to interpret whether that trial data is good or bad. And that's a type of edge. Another type of edge is simply comes from experience. So maybe you're a technical trader and you've documented all these patterns. And you know from your 1,000 of chart write-ups that this specific pattern, when it has fresh news and when it sets up like this, when it's breaking out on the daily chart, all of those variables leads to a pattern that has repeatable, capturable edge. Another thing is a lot of day trading brokers or trading brokers in general have amazing access to short locates. So you might be able to short a security that the rest of the market can't. That's another advantage. There's certain brokers that offer super cheap commissions. So there's some traders out there in stock market world that are just hyper scalpers. They're just making a couple pennies, but because they're with a platform where they have super cheap commissions, they're able to make money there where others can't. Another type of structural advantage could just even be if you're a trading firm, like a high frequency trader or an algorithm, you might have the fastest internet. You might have the most complete data behind a lot of your strategies. So there's a lot of ways to find edge. And that's part of what makes trading so cool.
You know what? It's hard to arrive at this understanding, especially when you come from like the Forex and future space, that in the stock space, when there is like unusual volume, like crazy volume, let's say like there's crazy float rotation,
Yep.
generally you can trace that back to something like a catalyst, like Tesla, for example. Tesla doing this crazy breakout. You trace that back to the election, right? And
Yep.
Elon Musk being, one of Trump's supporters, right?
Yep.
But in the Forex space, we're staring at this price action, and oftentimes we can't trace it to anything. It's decentralized. So you can't even look at volume and say, hey, there's 5 times, 10 times, 20 times the volume traded today versus yesterday or versus the last 14 days. I would say that the trader at home that's looking at, our interview, I would challenge them to say, okay, on any given day, if I'm trading like euro pair or the yen, like the price action that I see, how can I qualify that it isn't noise?
Yep.
Ask yourself that.
Yep. And so one of the best things a new trader can do, regardless of what you're trading, is find the craziest moves out there. Even if you're in currencies, look at what the yen did back in August. Those were some crazy moves, and study that chart. Find where the craziness is happening. Then what you want to do, you want to document all those. Then you want to reverse engineer it. And if you're not going after the crazy stuff, like let's say I'm convinced what I'm doing has edge. The only way to really verify that is by testing a hypothesis. Okay, what is your entry? What is your exit and your stop and your take profit, like all that stuff? What is your system for capturing that trade? And then you need to collect data. And that's the hard work. It's not enough to say, I think I have edge. You need to collect data. And it's the hard work that nobody wants to do. Everybody wants to just, open up their laptop and magically have edge and make money trading. But so often, it's the really nitty gritty, getting down to the details and saying like, okay, this is my trading system. What plays are you looking for? What does this Forex pair need to do? What is the setup? What is the intraday? What is the daily? Is there news? What's the volume like? Then if so, what are those criteria? Then what's the entry, exit, everything else? Then crunch that data. That is the ultimate determinant. Like when I'm speaking here, I'm presenting from my experience and my background. What's right for me and my knowledge might not be right for you and your knowledge. And the ultimate thing that's the truth is the data. Nobody can ever speak more than the data, right? And so if I say, oh my God, that's the dumbest crap ever, and you show me, Lance, I have 200 data points, I've made money over the last 2 years or whatever, okay, boom, you win. End of story. What you're doing, the more data you have, the more confident you can be that it is edge. So every trader, no matter what, you can listen to me or you cannot. And if you want to do your own thing, great. Like there's so many people that do stuff so much different than me. There's traders, especially in the Forex space, this guy, Tom Dante, great guy out of the UK. He's been a trader for a while. And what he does is so foreign to me. But when you talk to him, this guy knows his data down cold. He knows all the probabilities for the different trades. He knows its different playbooks. And ultimately, he has a track record of being profitable. So it's like, look, I do something different, but there's many ways to skin the cat, and the data trumps all. If you have expected value over the long run, you will be making money. If not, you're going to be losing. And that's the full stop, end of story. Like, even though I teach a lot of concepts, expected value and the math trumps all, because that's the only reality there is in this game.
Yeah. So let's talk about realities a little bit. And you mentioned algorithms. So the only reason I touch on this is because there's a guy that has a massive following, over 1 million followers. And he argues that something that's structural to the market is that there is one algorithm that he helped code. And because of that one algorithm that he helped code, he's in a position to teach traders how to beat the algorithm. So if they think that that is structural, right, to the market, they're going to design their strategies, their playbook around that, right? So can you speak to that just from the other side? Like we're looking at it from the retail side. It seems like there's a lot of secrecy, but from your side, what do you think about that?
Oh boy, I don't even know where to begin. So first of all, I know who you're speaking of, and I'm happy to call this person out because he is, the ICT, as he likes to call it. This person, despite such a massive following, is a proven fraud, right? And this person has blown up multiple accounts. This person has never verified their P&L. And the times that they did verify their P&L, it was all photoshopped. And nevertheless, the ICT has such a huge following. And I don't know how that's possible, because I think most people are just blind and they don't ask the questions. They want to believe something regardless of whether it's true or not. And so here's the thing. There is no centralized algo. And if so, it definitely wasn't this guy. What firm did he work for? What pedigree does he have? Nobody knows this guy's background. Nobody has this corroborated anywhere. And the thing is too, is it's not a central algo anywhere. Like the beauty of a market is it's all these participants around the world coming together doing different strategies, right? Like I might sell at $5, and based on other data or other strategies, $5 could be a good sale for me, and for someone else, it could be amazing buy. And what you get is all these participants all over the world acting independently, right? You have the market makers, you have the high frequency traders, you have the algorithms, you have the day traders, you have the swing traders, you have the retail traders, you have the institution, the hedge funds, you have mutual funds. And so to think that there's one algo that drives all this is nonsense. If so, wouldn't this guy be some massive billionaire? Right? Rather than a proven fraud. And it's so crazy because people just want to eat this stuff up without asking questions. And it's always this like fraudulent moving the goalpost where it's like, oh no, like it's all these excuses. When it's like, okay, and I'll even say this now, God knows if this ever makes it to the guy, I will literally donate $100,000 to the charity of his choice if he verifies on Kinfo. And again, you'll always get the conspiracy theorists that say this or that. But like, or even some mutual credible party. Look, if he goes on your podcast and he verifies with you, okay, great. Okay, fine. I'll donate the $100,000. It doesn't even need to be in public. Just any third party independent person I'll verify. Because the truth is, I am 100% certain he is bullshit. You know, like he does these funny things where he photoshopped his P&L and he was caught doing it. And he said, oh, this was a test to see, you know, who my real little munchkins are. It's like, one, like all of his antics are creepy. And two, bro, come on. That's like the most bullshit thing I've ever heard in my life. Like this was a test. Come on, you got caught. And so look, people will always believe what they want to believe and people won't ask questions. And like, it used to drive me nuts and it still kind of does because there's so much fraud and scam out in this sector. But at the end of the day, I think the real traders know who the other real traders are and real knows real. And eventually that just kind of surfaces to the top. And the people that want to be sold some dream, the people that want to just fall for the green Lamborghinis and the laptop lifestyle and the private jets. Look, man, like you can fall for that. You're young, you're ignorant, you don't know any better. But like at some point, that's not going to get you where you need to go. And you're going to be stuck. And it's either, hey, you recognize it for what it is, you call it out for what it is, and you find real content, or you find a real job because it's not doing what these guys are doing.
Yeah, man.
The easiest money is in marketing and being those frauds, right? It's way easier than trading. Trading is hard. It never gets easy. Even for me, trading is still insanely hard. I still take big losses, everything else. But what isn't easy, or what is easy and without the risk and all that, is selling a fraudulent dream to people that are willing to believe it and looking for hope.
Yeah. Real recognize real, man. And what's happening is the quote unquote edge is constantly eroding, right? So there's a new model, there's a new strategy, there's a new teaching every year, but they just, whoever buys into it, they suffer erosion like immediately almost. So can you talk a little bit about how you were able to sustain over such a long period of time, like from 0 to 10 years to even now, like this being your biggest year? You've constantly had edge. Like just share with us a little bit about maybe some of your core strategies that you trade.
Sure. So I would say yes and no. Without a doubt, there is some edge erosion over time. Markets, again, going back to that efficiency concept, markets get more efficient and some strategies do change. But I would argue a lot of my concepts that I've been doing for, almost 15 years now still hold true. And they held true even before I was trading. My trainer was doing those another 10 years before me, right? So how many algorithms, HFTs, other day traders, all this stuff have come and passed over the last 20 years? And I can even go back further in time using Bloomberg, and I've found charts where these concepts still hold the same. You still find these exhaustion gap patterns. You still find amazing consolidation breakout patterns. You still find how breaking news affects stocks and stuff like that. And so some stuff does go in and out of different market cycles. Like this year has been a pretty bullish market. So we've seen some upside exhaustion gaps where a stock goes up, then has that euphoric gap, like an SMCI, for example, an MSTR. And those patterns have held true for 20 plus years. In a euphoric market like we've seen this year, or even in 2021, I'll be doing a lot of that playbook. Now you get certain markets where low float stocks are super hot and in play. When those are in play, I'll play those, all from my lens of technical analysis. But you really got to move to whatever the hot theme is. So back with trading the broken slot machine or whatever is the most in play, when AI stocks are going crazy. I want to trade AI stocks. When Chinese stocks have the news of the Chinese stimulus, I want to trade Chinese stocks. When there's conflict in the Middle East, I want to be trading oil. When we've got the election moving Bitcoin and Tesla and DXYZ, I want to be trading those stocks. So often I'm adapting what strategies I'm applying based on what's the most in play and making the craziest moves.
Okay, so we're going to jump into some charts here. But before that, I wanted to ask you about trading the range. Many in the Forex space or future space may have to trade the range at times. I know that there's strategies for trading the range, but when it comes to EV, is there a higher expected value in trading something that has that directional skew over time?
Yeah, so I think many in Forex world end up trading the range because most currencies and most of Forex, again, by the nature of being more efficient, tends to stay more range bound. So that's really not a bad idea. Like if stuff is range bound, that's your best choice. And what you see even in Forex though, is occasionally those long held ranges will break. And if you can position yourself for the break of those long held ranges, that's when you can get some amazing asymmetry. So if I were to trade something range bound, like that's the way to do it, is just to play kind of mean reversion within the ranges. But once that range breaks, that's where you get some of the really nice asymmetry, where you might be able to risk X and it goes 5X or 10X. And the beauty in stock world though, is you can get so many more setup possibilities because rather than, 20 pairs that you might be looking at, you have the universe of 5,000 plus stocks. So you're just getting so many hands dealt to you as well.
Yeah. So you made 8 figures in 1 week this year.
Yeah.
So I'd like you to break down that setup just from selection, the concept, idea generation, down to the entry. But not only that, I'd like you to share some of the base hit types of setups, right? So there are some traders that may be watching. Maybe some of the larger themes are out of reach, but what would just be a base hit as well for you? So we can just kind of jump in here. Maybe you want to share the big trade and then jump into the smaller one.
Sure. So let's start big picture and add context for what was really the best week of my career, actually. And full disclosure, as many know that follow me, I don't trade full time anymore. I run a nonprofit. I do a lot of the content work. It's just got tired of the full time trading. But when things go crazy, like this year, there was a lot of craziness, I'll still come out and I'll trade my own account and go big on some stuff. You need to understand that to succeed at the markets, you need to mold yourself into someone exceptional.
Lance Breitstein.
Lance Breitstein.
Lance Breitstein has made over 10 million in trading profits in a single year, multiple times.
In this arena, it's you versus every institution, every veteran trader, and every shark out there. People like me with decades of experience. And trust me, they'll take your money. I'm gonna give you all the tools to compete and succeed. And when that goes well, let's go. There are 3 basic characteristics that make up an elite trader. First, and above all else, you need a deep understanding of expected value. Expected value, whether you know it or not, drives every trading decision you make. Second, elite traders also know when to bet and when to bet big. The third part, and often the most overlooked one, elite traders have learned processes to improve their trading game. In this ever-expanding course, I'm going to teach you all of these things, along with trading concepts and nuances of technical analysis I've never seen published by anyone, anywhere. For example, I'm getting most aggressive when the less experienced traders are the most scared. Well, that's not magic. It's usually based on a combination of things that I've learned to master and take advantage of after thousands of hours in front of the screen. I've used the material in this course to make tens of millions of dollars, and it has taught the traders that I've mentored to make millions too. And I'm gonna teach you how to do just that. I think that was cool. I think we do it once more just because. Yep. Get ready to master expected value, exponential bet sizing, how to structure your positions, and how to execute trades within your playbook. If you can learn to master the odds and the psychology behind what you are doing, it's entirely skill-based in the long run. A lot of people can convince themselves into thinking that they're losing because they're unlucky, when it's actually just a lack of edge. Too many beginners have no edge, no real strategy or playbook. and they get fooled by the randomness of the markets again and again. You're going to make a lot of mistakes. Learning nothing from those mistakes is the mistake. To stay competitive, you need to learn and continually employ the principles that allow one to outperform the market year after year. I'm Lance Breitstein, and this is my compendium of everything I've learned trading on Wall Street. This is the legacy I want to leave the trading community. This is my Magnum Opus.
For a special discount on Magnum Opus for our viewers, click the link in the description or use the code during checkout. Let's get back to the episode.
And what happened in August, in the beginning of it, we had the yen that was just melting because essentially the Bank of Japan was, holding their policy despite the currency getting wrecked. And what then finally happened was a shift in policy, and so many people were riding the yen short, and then finally caught everyone off sides, and it led to this huge amount of short covering. And so that's the type of situation where I won't necessarily mind trading the yen and a currency, but more important than that, what the yen did is that then caused the Nikkei, and so here's a chart of the Nikkei futures, and we're gonna zoom in on this little bit in August, and so you can see that over the course of 3 days, the yen got absolutely crushed. Like, we were around 40,000, and within a couple days, we end up touching a low of around 31,000. So now the Nikkei is the Japanese stock market, like the S&P 500. How crazy is that to see the whole Japanese stock market fall over 20% in a matter of days? Those are the types of moves that happen in futures and stocks that you don't really get in Forex. So one of my big specialties is what's called a capitulation trade, meaning a total flush out, a panic where everyone long just gets taken in the cleaners. You get a huge panic, you get a huge exchange of volume, and then new owners with a new cost basis. So a couple things went into this. So this big day on 8-5, August 5th, this was following over the weekend into the Monday. And when futures opened on Sunday night, futures like Ethereum got absolutely nuked, Bitcoin got nuked. And so it was this rolling panic of risk assets, and the yen continued its surge. And that triggered, like, if a currency goes up, generally the index then goes down. And what happened though is the index went down so much more than you'd ever imagine it would. So I'm going to quickly pull up an intraday of this. And now that we have an intraday, you can see what the yen did. And so this was on Sunday evening, we start to sell off. And so the yen is squeezing and the Nikkei does this move, which at the time seemed enormous. But then what happened is, and this is all in Eastern time, around midnight, the Nikkei ended up rolling to lows, and we ended up having this really crazy panic. Now think about the price changes on this. Like, we were at around 34,000, and then a couple hours later, again, this is like the S&P 500. Their whole main market index is down another 10%. And so this is where I started to really go big. And you see just this total acceleration. And so here was crazy. And so I have a concept that I call the right side of the V, which is I don't want to buy on the way down. I want to wait for the turn. A lot of times I define that turn as the break of prior bar highs. And so here we're panicking. I'm buying a little bit, but then once we turned here on this bar, we break prior bar highs. I got a lot of size. And guess what? It went to lows, just barely. And I got stopped out for a huge chunk of it. But we reclaimed, and I bought back here. And then we have a really nice bounce. So here was a higher low. Here we make a higher high. Here we make a higher low. And right here, this for me, when we get above this high here, and after consolidating and settling in, this area right here, this was the big, like, okay, I think the lows are in. I think overall, all the peak panic and everything, and because so many funds and hedge funds and everyone's just getting liquidated. Like, the market's not supposed to panic that big. And so this is where I really added. So then we did roll over a little bit, but we never went anywhere close to those lows. And over the course of the day, we held up really well. And now if we go back to the daily chart, what you're going to see is we ended up bouncing exceptionally well. And now I'm going to add some context to this too to keep in mind. So I have Bloomberg. I still keep a Bloomberg subscription and everything else. And so during this move, I was watching all the headlines and everything else. And while all that is happening, Bloomberg published an article making the point that the volatility in the Nikkei was pretty much some of the highest volatility ever. Now think about it. Even compared to COVID, this was blowing out all of that. In COVID, there's a deadly virus. The whole world is shutting down. It's peak apocalypse stuff. Like, talk about scary. The whole world was actually scared to our core, right? All that happened here was a bunch of people short the yen got caught off sides. What's scarier? Yet we were melting like we had never melted before. Now watch this. Even if I go to like a 5-year weekly chart to really show the scale of this move, and you're gonna see just how crazy this was. So back here, we pretty much have COVID. And so of course, this was a big move, but this happened over the course of like a good couple months right there, right? And what's so wild about this is this move in the Nikkei was pretty much just as big, but as we saw, the bulk of it happened in 3 days. And especially that latter part, that essentially, to fall over 10% in 1 day is crazy, crazy, crazy. So all of those were indicators to me that we were seeing peak panic. And essentially what I'm doing is I'm finding where the craziest moves are, then I'm using my technical system to capture those moves. And like I discussed with the intraday, that's how I'm timing the turn and executing. So I always have a stop, right? I took a decent loss initially, rebought back, and then the technical pattern started to develop in a way that I could catch this bounce. And so for me, because this daily chart was so overextended, I'm generally holding a core as a swing. So I always talk about that when you're trading good tickers, making good moves, you can have simple systems. So one thing I do is if I'm trading a daily chart and I'm trying to hold for days, my stop is prior bar lows. And what you see is that this pattern held prior bar lows and pretty much retraced the whole move. So it wasn't just the Nikkei. What we also had is a massive move in the VIX. And so even when we look at the VIX, again, it was my thesis. Oh, and the best part about this trade, I was tweeting all of this in real time. So you can go back and you can see the timestamps. So if you want to say, oh, Lance, I still don't believe you, I don't believe Abdullah, go back to August 5th, check the timestamps. I literally was saying, I was up late, I was stuck, I got no sleep, I was up all night. So I'm like, might as well, have some fun with this. And everything is timestamped. I said, this is the peak panic. I am just pretty much maxing out risk assets, thinking it's all gonna bounce. And you can't that. The timestamps are right there,
Yeah, I was watching it on Twitter. You helped me make like 5 figures. So.
Hey, let's go, man. Let's go.
Yeah.
I'll take my commission on that. No problem. But no, that makes me happy. And it's like, generally I don't do that because you're sticking your neck out and like you can get so many haters and like, it's trading. Like there's times where I take losses. But this one I was super, super confident in. And so you even have stuff like the VIX, which is just, measure of volatility as an index. And look how well that held prior bar highs. So you can have some massive swing trades. Then I was also super involved in Apple. And because this was a crazy move for Apple. Yes, Buffett sold some into this weekend, and people have so many conspiracy theories and stuff. They're like, oh, what does it mean? Well, it means that this was just a huge overweight position for Buffett. And it's just that it gets reported those days. So Apple was down over 10% in 1 day. One of the biggest companies in the world. And so that's the type of thing where I'm buying that intraday and I'm swinging that. And look how well that held. Now, yes, this is an exceptional bounce and I did not expect things to bounce this well. So I was definitely lightening up as things were bouncing so well, but the system worked. And in the aggregate, if you're trading the right crazy stuff, the system works well enough. Not always, right? Like this is definitely an A+ example because the opportunity was so great, but the best things tend to work well. And it's not hindsight. If in the aggregate, I'm executing this stuff, right, for almost 15 years now, and it all still works. And I'm not hiding anything, right? I've been tweeting all these patterns and all these, like swinging a stock based on the daily chart and using prior bar lows or prior bar highs. I've been tweeting this stuff openly and nothing to hide for years now. And then, it just so happened for my biggest trade ever, I was live tweeting it with the timestamps.
Yeah, beautiful, beautiful. So this shows like your level of expertise. You're able to swing trade and also trade the lower time frame. Last time you mentioned that you believe that the lower time frame had more edge than the higher time frame. So can you show us a lower time frame trade? Like maybe that's a lower time frame idea or just a scalp idea or maybe a base hit.
In general, and this is the other thing I'd argue about Forex too, for people that are like, oh no, Forex is the same level of opportunities. Forex has insane amounts of liquidity. If you could have the same level of edge in Forex as in stocks, so many people out there would just be mega billionaires because there's some incredible moves in stock world. But the issue is they're happening so fast that you don't have the liquidity to really go nuts, right? So here's an example. I'm going to pull up this MSTR. Man, it looks kind of super silly now in the scheme of how crazy the stock went. But essentially, the daily chart highs were around $200. So if we're looking at this daily, what I really want to zoom into is a little bit over here, and we're going to cut off some of the crazy move. And what we see is we had $200 high, we had $200 high. So this bar right here on October 11th, this was going to be pretty much an all-time high breakout in MSTR. For those that don't know, MSTR, pretty much, it's technically a software company, but it really just holds a ton of Bitcoin. Michael Saylor is the CEO, who's been, ex-CEO, but founder, super public about it. This is really just a vehicle for holding a lot of Bitcoin. And this had held up daily chart wise incredibly well. Bitcoin was not breaking to highs. This stock held up so well. And so we're going to jump into this 10-11, October 11th bar, but with the context that $200 was a big level. With the context of that daily chart, we're now going to this intraday. And what we see intraday is just like we had that resistance and the all-time highs at $200, on this intraday chart, we also had a really nice tight setup against that $200. So essentially a really great intraday, like kind of base hit, this is just like a free throw. You can do this all day, is you have multiple time frames aligning with that $200 level, and you can buy that $200 break. And again, my base default stop for things that I think are going to trend is prior bar lows. So you buy this $200 break, and look, 1, 2, 3, 4, 5, 6, 7, 8, 9. For 9 bars we hold, and we then break it there, so you get out at around 205. And that to me is an example of a really nice base hit. And my stop would have been, you can either give it to getting back below $200, or you can give it to the lows of the bar or the lows of the prior bar. Depending on some of the liquidity and the different nuances, my stop, it's more of an art than a science which I choose, but all three of those are viable. And I truly believe that regardless of what stop you did here, and some will work sometimes, some will work other times, there's pros and cons, but I do think all of those are viable systems. And so even if we were giving to prior bar lows here, which is roughly $1.99, you end up risking 1 point and you end up making $5. So 5-to-1 reward to risk. I would say the win rate on this was a pretty big setup. Multiple time frames aligned. We had really good volume increase on the break. This is a stock with high short interest. So all these are nuances and variables that go into my decision making, right? If this wasn't all-time highs, I wouldn't have been so eager. If this wasn't relatively strong to Bitcoin, I wouldn't have been so eager. If this wasn't highly shorted, I wouldn't have been so eager. But when you get all of that aligning, all those things start to stack up and give you edge. And that's where I would say the probability of this working, I don't know, maybe 60, 70% that this was going to go cleanly. And if you do that math and you do 60, 70% win rate, plug it into the expected value formula with 5-to-1 reward to risk, that's a really awesome trade. So that's an example of the much more smaller intraday trades I might be doing. And you can also even structure this as a swing trade. That's what makes trading cool, is there's no right answer, there's no right style. I myself don't know what's best. Like, should one swing this? Should one scalp this? There's so many different ways to do it, and we never know the exact probabilities. We never know what the true risk reward was. So we never know, even with hindsight, what the true expected value of a play is. So even as an expert with thousands of hours, tens of thousands of hours, that's been doing this forever, we're always updating our assumptions and refining, and we never know the truth.
Yeah.
And the cool part is with poker, you kind of know the universe of cards. You can make some really good assumptions on how you should have played a hand and what the outcomes could have been like. With trading, you're constantly updating your assumptions based on your trading data, your observations, the changing market. So there's markets where breakouts are super, super strong. And we've been in a strong market in 2024. So a lot of the semiconductor AI breakouts were amazing plays. There's different markets that aren't as strong where those plays aren't nearly as good. So we always got to be adapting to the market in front of us.
Okay, so let's talk about variance a little bit here.
Yep.
So you mentioned a 60 to 70% win rate. Now, if we start to pluck away some of those nuances that you talked about, right? Let's say you said Bitcoin, right? This MSTR in relation to Bitcoin, like them holding billions of dollars worth of Bitcoin, right?
Yep.
And whatever Bitcoin was doing on October 11th, right, has some relevance. So if you were to take that away from this and you're only looking at the chart, like how much of that win percentage would be carved out or reduced because of that?
Yeah, that's a good question. And it's all you can do is give your best guess, but you never really know. So at least for me, the most important factors, I would say, the intraday is always the most important to me, generally as an intraday trader. Like that's how I structure my trades. So the fact that we had a really nice intraday level there at $200, that's big for me. That's probably 40% of the importance to me was intraday. We had a nice level there. Another 30% of it is that on the daily chart, that was all-time highs. That's a really big factor. Then maybe another 20% is knowing the context of this stock. MSTR has been very, very in play. It's got a high short interest. Then I would say 10% of it maybe is the fact that this was way relatively strong to Bitcoin. And again, I'm just ballparking. There's no true answer to ever know that. Nobody on earth can give that answer, but that's my guess and how I process those things.
Yeah, so this being all-time high for MSTR, why would that be a factor? What's behind that? Like, why does that work out with stocks?
So that's a great question. So MSTR having a lot of hype around it. So this is the type of stock that people follow on Wall Street Bets. This is the type of stock that a lot of day traders are keeping their eye on. So if you're a technical trader, it's just classic all-time highs breakout. So you get a lot of technical traders that want to buy the breakout. You get a lot of people on Wall Street Bets that all of a sudden they get excited again and they're buying calls, they're buying stock. So you get all these participants that want to buy the stock. Now, guess what? If you're a hedge fund, and essentially this is trading at a premium to its Bitcoin holdings, so a lot of hedge funds are short this thing. There's a high short interest. If you have a stop on your trade, right? Like even hedge funds still need stops. Like they can blow up and do blow up and stuff like this. So hedge funds, look, they're not necessarily trading the chart, but they're not ignorant either. They know technical analysis. And even if you don't, you need to stop somewhere. What's a super convenient stop to prove you're wrong? All-time highs or the highs or whatever. And so even hedge funds and bigger players, when this breaks $200, they need to cover. A cover is the same thing as a buy. You're closing a short by buying the stock. And so my belief is the reason why these technical patterns work is because you get these areas, these specific moments in price and time where so many market participants are all trying to do the same thing and it works. When you get all these participants, and I want everyone on my side, right? I want the day traders on my side. I want the hedge funds. I want the institutional money. I want the Wall Street Bets YOLOers on my side. I want everybody and their mom buying that stock as it's breaking out, but I want to do it first. So I want to buy $200.10, $200.50. If you're a hedge fund trying to cover 500,000 shares of this thing, guess what? You're not covering it all at $200.10. So you got to move this thing 4%, 5%, 6% over the coming hours. So that's the type of stuff I want. So the beauty of certain breakouts is you get so many market participants that are all trying to get in at the same time. Now, again, our advantage is as day traders or as smaller traders, we can be super nimble and we can literally get $200.10. And that's our position. Now, if you're a huge institution, you got to move that thing, right? You can have an advantage actually as a smaller trader. Yeah, so let me show you even a couple more examples and how, if you're new to this stuff, I think you should reverse engineer and start to learn this stuff. So this first example is a stock that's been absolutely exploding. So what you want to do is find filters or even just, internet, Twitter, whatever, to find the stocks that are making the craziest moves. One of them has been this QUBT, which is someone just the whole quantum computing, everything. And so this is a really nice daily chart breakout. So we've gone from 750 pretty much to 25 over the last couple days. So then what I'm going to do is I'm going to reverse engineer this chart. And I'm going to say wow, so we had already made a massive move. A month ago, we were in, $1, $2, we make a really big leg, we consolidate, we hold this moving average, then we break out. So then I'm going to test a couple hypotheses, right? So what happens if I buy this break and I give it to lows of the bar or prior bar lows, and then I use my trailing stop? So as of right now, I don't know how this example, we're in real time right now. I don't know how this example will end, but the way, I would trade this for my swing system is you buy that break of highs. This high was, about 920. So you buy that break on 12-16, then you give it to prior bar lows as a trailing stop. So, we held those lows, we held those lows, we held these lows. So I don't know how this one will unfold, but I would be documenting this pattern and those nuances, okay? This is a stock that started to do insane volume. Notice the volume on this, especially given how much higher in price. This was a huge volume bar there, but now we're almost 10x higher in price. And so this stock did incredible volume starting early November. We then consolidate across, we break out, and we're going to test that over time by finding more charts like this. Then I'll even find, this.
Lance, real quick, why do you trust buying the breakout here on that candle that actually broke out?
Sure. So why do I trust buying this breakout? Is essentially this is an in-play stock because it's been making a crazy move. We've been holding up really well, right? This stock went from $1.50 all the way to $9, and we're not pulling back that much. We're consolidating to the moving average. This is something that's really important to me. I do a video of this that's going to be free eventually and out in the public, but the proper consolidation for me is to this moving average. So we consolidated a perfect amount of time. We hold up, then we break out on massive volume this day. So this is just a pure technical play, right? But all those technicals align. How many stocks out there have gone up 5, 6, 7x in 1 month, held up this well, then boom, break to highs and make another leg?
On your entry, did you zoom into the 2-minute time frame?
Yep. So there's multiple ways to trade this. So you can trade this on the 2-minute time frame, or if I'm doing a swing trade and if I'm just trading the daily chart, I'm going to buy that intraday. Of course you need to buy this intraday. I don't wait for the close of bar. So I'll buy it intraday, but I'll just give it to lows and do then that daily stop. So that's if I want to swing this. Of course, like we did with that MSTR example, there's people where you might just want to scalp it or whatever else.
Okay.
And if I'm scalping it and if I'm trading it intraday, then I really want an intraday setup. If I'm trading something intraday, I care the most about the intraday chart. If I want to do a daily swing, I care the most about the daily chart. Ideally, the two align though.
So as one of the masters, you mentioned that you were one of the fastest, right, on the street. So
yep.
What are some intraday tips that you can give the short-term trader?
Yep. I mean, that's a great question. You want to know where people lose so much money on the retail side, and it just blows my mind. So many people on retail are not using hotkeys. They don't have those hotkeys optimized. And so many people will say, oh, Lance, that hotkeys only matter if you're scalping or if you're doing this or that. Bullshit. If you're losing pennies or 10 cents or dollars in every single one of your trade because you're sloppy or you don't have a stop in, that adds up over time. So even if I'm swing trading this, if the highs are 920, I want to be getting 921, 925, 930. If I'm sloppy and loose on the keys and I'm buying 960 or 970, and you do that every single trade in a year for all of your entries and all of your exits, that slippage is super material. Trading is hard, man. It's a game of really thin margins. And yes, this trade is working incredibly well, but not everything's going to be like that. So if you're just constantly giving away all that slippage because you're entering super sloppy, that's just total free money that you're pissing out the door.
Yeah.
Right? It's like, imagine if every time you went to the grocery store for that candy bar example, imagine if you paid $1.05 every single time. Like that stuff over the course of your life, given a couple percent on every purchase and every sale you do, that adds up.
Yeah. So you share with us a classical intraday setup, like with multiple time frames, aligning, breaking out. Is there another one that you'd like to share?
Well, I mean, I think the important thing for people to do is to document these setups. And again, look, I don't care if it has nothing to do with anything I advise or anything I follow. You find your path. No matter what your path is, you want to build these databases of charts. So going off this QUBT example, this kind of reminded me a little bit of this DXYZ setup. And so DXYZ is holding SpaceX, which is a private company, but essentially with that election, it started to explode higher. You know, the whole Elon Musk thing we were talking about. And so this stock went from $11 all the way to $50. We pull back. We then start to really consolidate tight. Again, we consolidate to that moving average. Then we break out to highs. And so this example here, I view this very similar in many ways to that QUBT. And so Nate of Investors Underground is really good about this. But you want to build this database in your head of all these different chart analogies. And when I see this DXYZ chart, I immediately think, oh man, it's just like QUBT. And so then I start to group these up. And you start to find all these nuances and you start to rate them. And you start to see like, okay, I don't actually love the volume on this breakout. I do like the consolidation. This does have a ton of short interest again. We did hold up pretty well, but this was weak. So you can start to build an eye for the nuances when you have 50 or 100 of these data points. But that only comes from documenting them and making these analogies in your head. And then a lot of it becomes second nature. And if you're really putting in the time to study, you just become an encyclopedia. Like when I was on top of my game trading full time, people would be able to pull up an example and I could be like, oh, this is just like ABC, this is just like XYZ, boom, 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 boom. And you build that in your head. And that allows you to make these decisions faster and more accurately. And that's also where edge comes from. When I can understand these analogies and these chart patterns better than the rest of the participants in the market.
So let's talk a little bit about eval firms. And you've been vocal about them. And
I've made a couple enemies.
Yeah, you made some enemies. You've been critical of them. Can you talk a little bit about why?
Yep. So let's set the record straight on some of this stuff. Eval programs are good for a very small minority of people. So I don't want to say nobody can make money with them. That's not true. There are people out there that make money, but it is the total small sliver of a minority. Now, meanwhile, there's so many people that will never make money on them because it's too hard. They rig the game against you. They add all these rules. And what's so wild is, again, people turn into such sheep, right? Just like with the ICT bullshit. There are people that say, oh no, the reason why you have to follow those rules, they're trying to help you. They're trying to help you build discipline. It's better for you. And I'm like, what? Dude, no possible world do you live in where adding rules and constraints and handicapping you is there to help you. All those rules exist for one reason. They do not want you to win. Their whole business model is based on you not winning and you reloading and going back to the eval again and again and again. These eval programs have tens of thousands of users. And guess what? Occasionally, if you're exceptional, you can beat them. Absolutely. And if you don't have access to capital, they are amazing for you. You are the small sliver that can take full advantage and crush it. But everyone else that's being sold their marketing and sold their bullshit, they're playing a rigged game against them. And all the money they're paying to pretty much just trade in demo, that is subsidizing the couple winners. And here's the key difference, because people will say, oh, Lance, isn't this the same as the true prop firm that you worked at? No, these firms are not the same. My firm that I worked at, Trillium, any true proprietary trading firm, they only win if their traders win. If all of their traders failed out, like the funded trader programs, they would be out of business. All of our incentives were aligned. They made money only if I won. Guess what? They didn't stack the game against me. They didn't say you can only trade X, Y, and Z. You can only trade A, B, and C. Oh, you must do X trades per day. If I don't have edge, they don't want me trading. If I can capture some opportunity, they want me trading it. It's not saying, oh, you must trade X amount of times. You must stay within these profit limits. You must do A, B, and C. There was none of that.
Yeah.
They just want me, assuming, legal, ethically, everything else, they want me winning. And they're only getting paid if I win.
Yeah, I find it interesting that the majority of them allow you to trade only Forex and futures, right? So with everything that we've been talking about in this conversation about those being more efficient markets, not only do you have these rules stacked against you, but also you're confined to more efficient markets, which makes it even harder to win.
Is it not so similar to how casinos operate, right? If you're playing blackjack, you can count cards. But guess what? You want to know what they do then? They start adding more decks. They start saying you can't count cards. And if you start beating the game, you're kicked out of the casino. And that happens at a lot of these funded trader programs. There are people that start to beat the game, they get kicked out. And now here's the thing. The reason why this exists again is because it's accessible. The people doing these evals, it's so many tens of thousands, maybe even 100,000 plus. And they know that there's no barrier to entry. All of a sudden, we give you capital, which is bullshit. You're just in demo. It's all sim pretty much. And they know you're going to keep coming back and reloading. And they know if they can gamify it and say, oh man, you were so close. You were so close to getting funded. And if you get funded, we're going to give you this award and this diploma and this social proof. Then all of a sudden, they have everybody addicted to the casino. And some of the people being harmed by this practice, it's so sad and it's so disgusting to me. Now, don't get me wrong. If you're able to beat that game, if they're rigging the game against you and you can beat it, you're awesome. And that's great, and you should be doing it. But that only exists because like 10,000, 100,000 people are being harmed by this rigged game.
So how would you make money in these eval firms if you had to?
You want to know how I would make money? Is I would start an eval firm and be the house. Like, I'm not one of those people that can make money doing that. So how would I do it? I either wouldn't play the game or I would try to be the house. And the best position in the world is to be Top Step or Apex. Do you know how much money these firms are raking in? It is disgusting. That's why they can afford all this crazy marketing and all this affiliate crap, right? And like, so actually, and I won't say this person's name. I know a friend of mine that used to work for Top Step and was one of the original people involved in it. The number of people involved, like funding these challenges, the number of challenges and the amount of people that are re-upping and getting hosed, it's staggering. And they know, right? It's like acting like DraftKings doesn't know that they're harming people. DraftKings knows there's a lot of gambling addicts that are just re-upping. And look, hey, it's legal. They're gonna play their game. And look, this stuff is legal too. They're doing a lot to avoid regulation. So my answer is, I would, if you wanted me to make money doing it, I'd be the house. You know what? Here, rather than funding them, give me your give me your eval amount, and hey, when you wipe out, I'll just pocket it. So that's how I'm making my money doing that.
So advice is save up your chips and go to the poker table, right? Instead of
and look, if you're obsessed with Forex or futures, like, that's fine. Still do that, but on sim. And I recognize that, like, look, it's hard to get capital, but if you build up edge and demo and everything else, or if you're going to trade with real money, still do a Forex and futures if you want, but just do it super small and just save up. And look, like, I'm sorry, but like, if you only have a couple $100 or $1,000, just keep on working your job and save up. If this is really your dream, but do not just waste your money on these eval programs. Yeah. And it's okay, man. And like, look, the reality of life isn't fair. We all want it to be fair, but it's not. Like, I'm lucky that I was able to get into a true prop firm that was able to give me capital. I recognize not everyone has the pedigree, the background to get into that. So I was lucky. But look, like, I can't magically make life fair. And just because life isn't fair doesn't mean you should be at the casino pissing your money away. Like, I can't solve these things. People are like, Lance, what are my options? How can I work for a firm? Like, I can't get the 100,000 people gambling away their money. I can't get you all jobs. I can't get anyone a job. But like, what I can say is, you going to the casino isn't helping you. You playing this rigged game, it's not helping you learn. It's not for discipline. And this shocks people. If I tried to play their rigged game, I would lose too. So if I'm saying I can't beat that game and it's rigged, and I've got 15 years of experience, why are you still paying money to play this rigged game? And like, if you need to save up for a couple years and work your job, like, I feel for you. I'm sorry. But I'm trying to do you a favor so that you don't waste your hard-earned money just at the casino playing this rigged game.
Okay, so I'm gonna ask you an ad hoc question. So I'm doing a small account challenge next month.
Sure.
Let's say Lance didn't work for the firm. You have all the knowledge that you have now, and you have to start off with a smaller amount of money and build that up, like we know, like the Kyles and some of the guys that trade
Sure.
small caps, right? How would you approach it? What would you do?
So for me, I would be biased towards stocks, number one. Number two, I would just be trying to find those little layups, like that MSTR intraday example. For something like that, I probably don't want a ton of overnight risk. I might not be overnighting anything. I'm trying to find small intraday examples where I can bet. I mean, if we're talking a couple $1,000 or whatever, if say $5,000, I'm probably maybe only risking like $100 per trade. And I'm just going to hit my little base hits and let it accumulate. And so a lot of the times it's like people want to rush all this stuff, but it's okay. Like just build your track record, right? As long as you keep on compounding over time, the P&L is going to come and that account's going to grow. But so many people are in a rush. And so if I have a 5K account, I'm probably risking $100. I'm finding my best couple little base hits each day. And if there's nothing great, I'm not trading. You don't want to be forced to trade. And that's why, like, truth be told, let's say I need to make a living off of that. If I only have $5,000 and I need to make a living off of it, I'm not trading. I'm working. And I know that's not what people want to hear. And like, I'm sorry.
Yeah.
And I know people have these dreams and they want to be a trader and they're hungry. And I've met so many good kids out there. I've met people that are 40, 30, 20, 18, 15, whatever. And they come from good backgrounds and they want this. But like, if I only have 5,000, truth is I'm working my ass off to try and stack the bills and build up a war chest so I can properly go after this. Yeah. And look, that doesn't sell eval programs, that doesn't sell anything, but it's like, it's just the truth.
Okay, so there's an opportunity cost with someone trying to pass these evals, right? They spend 2-3 years just trying to figure out how to beat the game when they could have spent those 2-3 years actually developing skill. And that's on the back of a promise, right? You can get rich quick, or you can get access to capital and make a bunch of money. Like, what's a realistic learning curve? Like, what's the time that it takes normally for a trader to start actually making some money, like in your experience?
Yep. And here's the thing everyone also doesn't want you all to know is what I found at Trillium. And again, you have some of the best education, training, mentorship resources out there. And now I mentor and am an advisor for S&B Capital. And they also train amazing 7-8 figure traders. The learning curve is the same. And with all those resources, it's still a 2-year learning curve if you're going to make it. Now, here's the thing. Let's say you're not gung-ho going at it full time with all these resources. If you're going at it part-time, it's no longer just 2 years. It might be 3, 4, 5, 6 years. If you don't have any mentorship, it might be 4, 6, 8 years. So if you don't have capital, if you don't have resources, if you don't have mentorship, if you don't have a clear path for learning, if you waste years, just studying noise and other crap, it's not going to be a 2-year learning curve. And nobody wants to be just vocal about it. But the learning curve is really, really long, and most still fail. Even at these top firms, it's not as if it's an 80% success rate over 2 years. You're still probably keeping like maybe a third of traders. And guess what? You're hiring the best of the best, right? Now think about how many of those funded trader programs is people that just shouldn't be even in the game at all. The gambling addicts, the people that have no knowledge of expected value, no system, they're just buying and selling. Those people shouldn't even be in the game. So when you take the best of the best with the best training and mentorship, and it's still just like a 1/3 success rate after 2 years, that's the reality.
So what differentiates those that make it versus the graveyard of traders?
Yeah, and that graveyard's deep. I've had to fire so many people over the years, and it always sucks because these are good-hearted, hardworking people. I think some of the differentiator is the level of hunger, level of hunger and passion. A lot of this stuff isn't so crazy complicated to understand. Like, we're not talking, advanced physics or rocket scientists or anything like that. But it's, can someone get beat up and lose and be frustrated and just keep on learning and trying to get better every day? And part of that is also coachability, because you can't be making the same mistake for months at a time. If you start making the same mistake and you don't fix it for 3 months, that learning curve just got 3 months longer. So coachability, where you can take feedback, you can be humble, you can learn from the market, and then you can incorporate that. So if I give someone feedback, I want them to start working on solutions. How can they make sure they don't make that same mistake again the next day? And so the faster you incorporate that, because nobody's a natural trader, like nobody understands, you can't just look at the stock market and be like, oh, I get how to make money. It doesn't happen. It takes so many years of testing, watching the patterns, studying, being provided strategies, learning strategies from others on Twitter, whatever else. And you still got to make it your own. And that only comes from like the studying the patterns each day, studying the nuances, and then incorporating something different and improving every single day for a really long time. So it's the people that are always incorporating, learning, adapting.
So what are some tangible ways to do so?
Yep. So I think a lot of people always sleep on this stuff because it's not sexy. It's people think when I talk about this stuff, it's me just hiding the real secret sauce. And the reality is the secret sauce is how you get better. It is the process. The process is all that matters, right? You can't control the outcomes of your performance. What you can control is the work and the quality of the work you put in. If I'm sitting there trading bullshit all day, I'm never going to get better. But I mean, and you can spend 8 hours just watching noise. But what I really want to do is I want to find what were the best stocks, what were stocks making the biggest move, what stocks had the most volume, what stocks had big breaking news, and I want to start cataloging all those. So I want to be building up my databases of all these charts. I want to be doing a daily report card. So this is very public all over the internet. I think it was coined originally by Mike Bellafiore of SMB Capital. So a daily report card is where each day you focus on one skill. What is one thing you want to get better at? And you judge your day not by your P&L, but did I improve at this one aspect? And your job is each day to just make that little bit of an improvement and work on those things. So that aspect of the process, make sure that you're making tangible improvements each day. Another thing that I really advocate for is filming some of your trading. So the same way a pro athlete watches tape of their performance, I highly recommend you film the big moments each day so you can restudy those. What did this chart pattern look like before the breakout? What do I need to see in real time to connect the dots in my brain? Not just hindsight after the fact, but I want to see this played out in real time again and again and again, because so much is pattern recognition. And to speed that up, you just need reps, reps, reps. So an advantage of a trader that's 15 years in, like myself, is I have tens, hundreds of thousands of reps. And the only way you can compete with that is by kind of getting those numbers up for yourself. And if there might be a couple good setups a week, you only got 2 reps. But if I can rewatch those reps 5 times, all of a sudden I might have gotten 10, 15 reps. And all of that compounds over time.
When I listen to you, I hear massive action. This concept, like whatever you think you need to do, you need to like multiply it by 10 or 20, right?
Oh, yeah.
So that's what I hear from you. So
and
can you
the hard work, like the data crunching, the studying the patterns, the deep analysis, it's not the easy stuff like, you know, fooling around on the internet, but like your brain should hurt. You should feel it and you should be like, oh man, it's like doing that hard workout set, that last set at the gym when you're aching and you're like, man, like I'm just so tired. That's the hard work where you're doing that, you're crunching the numbers, you're doing that analysis.
So how did you sustain this for 10, 15 years? It seems like it's hard, it seems stressful.
Yeah, I mean, so number one, you need to enjoy the game. If you don't enjoy the game, you're never going to sustain that. So that's big. And then the second thing is you build a routine. And that's part of the process too. And you have your routine and you live by it. And I think most people that are really fit, they have their workout routine and it's just a non-negotiable part of their identity, right? They know on Mondays, I'm going to do this, Wednesdays, I'm going to do that, Fridays, I'm going to do that. And they find ways to enjoy it. Maybe they do it with a workout buddy. Maybe they do it like they find ways, okay, I need cardio, I'm going to play pickleball or I'm going to play volleyball. So you want to find ways to make it fun. You want to find ways to enjoy it. You want to find ways to do it with other trading pod members so that you're on a team, so that you're all working together and learning from each other. And the other thing with working on a team is you learn faster that way. You learn from each other's mistakes, you learn from each other's growth, and you compete a little bit. So that part's important. And then ultimately, you just got to want something bad enough where you're willing to say no to all the other stuff out there. I talk about how I always went into the office on Sundays. Guess what? I wanted to go to brunch. I wanted to watch football Sunday. I wanted to go to the Bears game or whatever. But ultimately, what I wanted more is to be great at something. And there's always sacrifice. Nothing is ever achieved without sacrifice. It's just, what sacrifice are you willing to make? Am I willing to feel the pain of struggle and doing the hard work at trading? Am I willing to feel the pain of missing out while my friends are having fun at the football game? Am I willing to feel the pain of it's a Friday night and because I underperformed, I'm still at the office at 8 p.m. studying? Or am I willing to feel the pain of just underperformance and not achieving your goals and your dreams?
What about the person that says, I'm doing all of that, but I'm still seeing no results? Maybe I've been in the game 3, 4, 5 years. I'm still flat, or my equity curve is down.
Yep.
What do you say
and
to that
happens.
person?
It's not uncommon. So I think time is a factor. And again, the learning curve is longer than people think. But also, if you're studying the wrong stuff, it's not going to make a difference, right? Like if you're studying something that's just hyper efficient and it's all noise, and you haven't done the data to prove it's noise, you can catalog those charts as long as you want. You're not going to find edge. If I spent 10,000 hours at a slot machine in Vegas, do you think I'm going to win? No, because I'm putting the time in, and I might even collect all my data. Oh, hey, I'm losing 9 out of 10 times at the slot machine. I can collect all that data, and it might look like I'm doing the work, but I'm not doing it in a way that's effective or productive. I'm not playing a game I can beat even. Yeah. And so then it doesn't matter. And that's what's so sad about some of the funded trader stuff. People are spending so much time working hard at a game that just can't. It's not that it can't be won. There are people that win it, as I said. So I got to be careful with my words. There are some people that win it, but you're playing a very, very hard game. And so step one, make sure you're playing the game that makes it as easy as possible. Make sure you have the best resources. Make sure you have mentorship. Make sure you have teammates. And so something I always talk about, like if you're lost. So Traders for a Cause, and we've been together. I know you went to Vegas this year for their Keystone event. You get hundreds of traders from around the country and the world. And so if you're lost, go to some of these meetups for Traders for a Cause. There's regional ones. There's the big annual one. Meet some traders, see what they're doing. But even go on Twitter and start learning. There's so much free content out there. But you need to sift away from the bullshit and the scammers. So find the people that are verified. Find the people that are real. I mean, I think we both know the trader Kyle Williams, right? Mm-hmm. Really good guy out of California, young guy, and like he's not a bullshitter. He's verified. He's not someone that's making 10+ million a year yet. Although one day I think he will be. But he's a really solid trader and a great role model. Every single month he does a free video online that summarizes all of his lessons. You have amazing content like that. Every month for like 2 years now for free, I've been tweeting out where I think the best ops each month were. I just have a list. Every month I tweet out, well, I missed some months on this one, but I tweet out what the big lessons and the takeaways were from S&B Capital. And there's so many traders out there doing really good reviews. And so just find the people that are real and learn from them and make sure you're not falling victim to the BS.
So, man, thanks a lot. This has been amazing. Tell me what's next for you.
Yep. So the big thing is after a year of work, and when people, hear me say that, you can't even fathom the amount of hours, time, money, passion, heart I've put into this. So I think, my trading's been, despite having a good year, like I trade less and less. I'm getting older. I'm less interested in staying in this world. So before I step away from the trading world, what I wanted to do was put all my knowledge out there. And so I've spent the last year making what I call my Magnum Opus trading course. And there's going to be a free tier, and then there's going to be a paid tier that's going to help raise money for charity. And all this came after my Patreon. So I had a Patreon for $50 a month where I was doing kind of a monthly summary that Kyle would do, that type of style. I would do a monthly AMA, and we would super transparently donate 100% to charity. So it was super cool because these traders, like it's their money. They're doing it. Yes, it's in my name and I'm making the donation, but we all did this. Like we built a school in Bali for kids. Like these schools are so dilapidated. They don't have the resources. So there's actually this amazing video of this, students at the school saying, "Thank you, Lance," and all of them are waving, and they wouldn't be able to go to school otherwise. They just don't have the resources. We've donated to veterans. We've donated to cancer institutions trying to cure cancer. And that's really what gave me the model to say, like, wow, like this can actually do a lot of good. I can provide a source of education for people to find something real, but then I can give back and help people. And so that was kind of the model for this. And so I'm like, look, if I'm going to do this, I'm going to do this right. So I went all in. I mean, at this point, I'll just candidly say it was probably over $500,000 at this point to produce this course, thousands of hours. And so yes, there's going to be a paid version. Let me get in before all the commenters are like, "Oh, Lance is a sellout, blah, 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 blah," all the haters. Look, all I want before someone makes some negative comment, the release date is January 21st, 2025. You try the free version and tell me it's not the best thing you've ever seen, and then you can hate on me. But until you've seen the free version, until you've consumed those videos, nobody say a word, because it's going to be so badass. And I'm not just saying that for show. It walks the talk. So before all the people pile on and hate on me and call me bad, inappropriate names, let's just do that.
Yeah, I'd rather pay from an expert that's verified, someone that is bringing new knowledge to the public space. Really, I mean, I've read over 50 trading books, and the majority of them are just regurgitating the same concepts. And then you step out and you state things I've never heard of. And after I've combed over so much of the knowledge that's accessible to the retail trader, right? So you're bringing a lot of value. You've given a lot of value already. And you say, like you said, the free version. I've seen it. Oh my God, man. Yeah, I've seen the production is out of this world, right? So yeah, man, we appreciate you for doing it. Are you gonna have the haters? But people like myself, we thank you for putting this out, man.
What's so funny too is I have a team helping me review and edit these videos, of course, and they're all traders that have consumed a lot of these courses. So they'll be consuming these videos to make sure I don't have any typos or that it makes sense and everything. And they'll just be like, "Holy shit, dude, I haven't heard these concepts. This is amazing. This is so good." And videos like that, it's just 100% free for those. And so I think it's going to be so game changing, where my true hope is that this course, and again, forget the paid. Like if the paid does great, who cares? But I hope that this course becomes the default course for traders that are looking for real knowledge out there. And yes, I teach my styles, but mostly I'm trying to teach people how to think. I'm trying to teach people how to understand expected value, how to understand why technical analysis works, the psychology of all these patterns, all these little heuristics that will help their trading improve. And so if this could just become like the default resource, that would be a pipe dream. I'm going to try and always be building onto it, adding topics that people want to hear. And hopefully we get one day where, 10,000 plus, 100,000 plus traders are using this, because there's no modern resource out there. Yeah. Guess what? You want to know the demographic that doesn't consume books anymore? You said you consumed 50. You think 18 to 25-year-olds, or even our age now, people don't consume books. And for this type of content, you want the charts, you want bite-sized pieces, you want something that can stay updated and relevant. So that's why it was like, okay, let me dedicate 1 year of my life, which I wanted to quit and give up so many times because it was just so much work. But I'm like, let me do this right. Let me give it to the world. I want to make some money, make my costs back and everything else, but I also want to donate, a good chunk of it and see how far we can take this thing. Yeah, man. So when it comes to life fulfillment, you're one of the traders that I know that's not all about the Lambos and the lifestyle. You have a nonprofit, you're giving back a lot. Tell us a little bit about, why you're motivated to do those things. Yeah, and the truth is like, especially on the internet, like people don't know me. So people will say, "Oh, it's all for show." And that's fine. You can never change these people. These aren't people I'll ever meet, I'll ever care about. But the people that do know me, friends, family, everything else, like they know the real Lance. And for me, like I've never been the most important thing. Like I grew up with I had a good upbringing and everything else, but we worried about money. So number one was I want to be able to provide for myself and have the freedom and the life my parents didn't get to have. And so that was always number one. And then as you start to make some money, I think everyone when they're young in their 20s, you spend a little stupid, but then you realize like is this really serving me? Like, does this actually make me happy? And so often, all the stuff like, look, if you love cars and a supercar is going to do it for you, get that supercar. But like, if you find that stuff ends up leaving you empty, look, you're not alone. And I think most people, they're just doing it for the external affirmation rather than finding the stuff inside that really matters. And the stuff inside to me, being healthy, hanging out with friends. We were able to grab, dinner last night while you were in town. And like that was an amazing, fun, memorable dinner. As long as I have enough money to provide for myself, my family, the people I care about, stay healthy, have fun experience, like that's the stuff that really, really matters. And so many people, when you're in the nonprofit world, there's so much suffering out there. And you forget how lucky just to be healthy, just to be having this conversation, just to be able to trade inside an air-conditioned room is so huge. And so then when you see the people that aren't so lucky, young people dying of cancer, kids that look forward to the school week because over the weekend they're on federally subsidized lunch programs, so they get lunch during the school week. On weekends, they go hungry up to 72 hours. When you interact, I mean, you're a father, you know that stuff. Can you imagine your kid probably, I mean, especially in the Houston area, your kid probably goes to school with kids that are on these programs that over the weekend, they're not getting food.
Yeah.
And there's these nonprofits like Blessings in a Backpack that I do a lot of work with. Every Friday, they're volunteers that sneak in and pack them an extra backpack full of food so they don't go hungry on the weekend. And so it's like, look, you can have your $400,000 Lamborghini, but is that really going to make you happy? And like, think about how much more important it is. Like for that type of money, there's probably 4,000 students that cannot go hungry and live a better life because of that. So it's like, what really matters? Like what's truly your legacy going to be? Like, will there be haters? Yes. But I know why I do stuff. I do stuff because I want to help traders out there learn and succeed in something that I'm so lucky that gave me success, happiness, and freedom. And then I also want to give back to people that never had the chances we did.
Yeah.
Just to be in America with the solid upbringing, solid education, the ability to work and achieve, like that's a blessing.
Yeah, man, you're definitely leaving a legacy in the trading world. I'm happy to be a part of that by bringing this podcast to the public, and you're leaving a legacy outside as well with your charity efforts, man. So we appreciate you leading the cause in both spaces. So I just have a few questions from the community, right? If you don't mind, we can just do some quick fire, maybe 30-second, 1-minute answers real quick. And these are all sourced from our audience. Thank you all for sending in the questions sourced from.
For the record, if I had to get a supercar, it would definitely be a white Ferrari. And so it's not that I don't want it, but I try my best to be like, okay, Lance, you got this. You don't need that. So.
Oh, man. Yeah, man. Get your Ferrari, dude.
Maybe one day.
And call me so I can ride in it with you, man.
You're on for that.
All right, man. So now I haven't asked you any questions regarding psychology. Someone says, I'm obsessed with psychology. What are some things that a trader can do to improve their trading psychology?
Yep. So psychology is always a hard subject just because it really depends the individual. And so I work with one of the best trading psychologists in the game. He's worked for some of the best trading firms, the best hedge funds, been doing a really long time. So while I'm not an expert and I'm not a psychologist, I do have some insights into this. And so I think the first step for a lot of these issues tends to be awareness and understanding. Right? If I'm over trading or if I'm acting out of FOMO or if I'm rage trading, the first step is like, I need to identify it as a problem and be like, okay, this is what it is. Then the next step is once you have that awareness, you want to try to find the trigger. What's leading to me to overtrade? What's leading to the FOMO? Why am I rage trading? Then you want to find ways to avoid the trigger, right? If the reason why I'm trading out of FOMO is because someone on Twitter is making all this money and he's vocally short and the stock's going down, if Twitter is making me trade out of FOMO, then I need to avoid Twitter or block that out. And so first you need to be honest and truthful with yourself. You will never, if you don't think you have a problem, you will never ever identify or fix these issues, whether it's overtrading or whatever else. So first step, being objective and taking the time to do the real reflection, identifying the issue, finding the trigger, then building solutions to avoid that trigger.
So what would be your advice to someone that decides to stick with futures?
So I don't think there's anything necessarily wrong with that. Like, fine, there's different ways. There are people that are very successful futures traders, but the most important thing I would say is just make sure you're collecting the data. Make sure you have a reason for why what you're doing might have edge, and still be open-minded. And I got to give you credit, right? We had our conversation probably about, was it a year ago, 2 years ago?
Yeah, it feels like it.
Yeah, time flies. And since then, you were open-minded to what I had to say. We had some discussions even outside the podcast, like we had some back and forth, and you were just open-minded, and you, as a result, changed and evolved as a trader, and hopefully for the better. And what's so interesting is there's so many traders out there that, as I've been on these tirades and everything, they've changed their mind and they've been open, and a lot of them have found more efficacy doing that. One of my best friends is a really good futures trader in San Diego. He ended up listening to some of my arguments, and he ended up switching to stocks, and he was just dumbfounded. He's like, dude, I can't believe I wasn't doing this all along.
Same.
Yeah. And so it's part of the learning process. Like, you got to make mistakes. You got to find your own path. And for some, it might be, wow, there's actually more opportunities than I thought over in stock world. Others, like, so even I think, Tanner, the strong trader, really great guy. He's someone that I've talked about all this stuff, and he still finds that futures resonate for him. He has his patterns and he has his edge there, but that doesn't mean you can't apply some of the concepts and the thinking. What I would say is just, hey, be open-minded, find what works for you. If what I do doesn't work for you, no big deal. You don't even have to listen to me. Just do what's right for you and trust the data and find your own path.
So do you recommend someone start with options or shares?
Options are going to be way more complicated. I do not recommend people start there just because you're adding more variables, right? At the minimum, the time variable. And I think most people get seduced because you can get some massive home runs buying options. But there is a different layer of risk and complication and complexity. So I do recommend against options for beginners.
Okay, so someone asked about bet sizing. Besides the news or there being a fundamental catalyst, what would you need to see in the chart or a price action or volume or in the tape that would push you to add more size?
Yep. So this is where the theory and the concepts matter. And I always love poker as an analogy because I think most people understand poker, have played it, and can relate to it as a simpler world. On a hand like 2-7, I don't want to be betting anything on 2-7. I think we can agree on that. Yes, there's exceptions if you're bluffing, but most people, you want to fold 2-7. If you start to get a hand like pocket tens, that's actually a pretty damn good hand. You want to bet some amount of money on that hand because overall, in the aggregate, you're going to tend to win with pocket tens. So there's some amount you want to bet on that. Then when you get aces, which is of course the best starting hand in poker, your odds are most favorable. Any experienced poker player knows that you generally want to be most aggressive with aces and bet the most because it's the best hand. And for some reason, in stock trading world, because it's more complex and you're adding layers of complexity, people don't realize that bet sizing and those concepts apply the same way. So the way you always want to think about it is your absolute best expected value trades, you should be betting more on than your good trades and way more than just the kind of not so good wishy-washy trades, just like in poker. And in poker, if you have aces or one of the best hands, you're betting magnitudes more. And in trading, there's no limit. You can really add a lot of skew. And beginners should not be going crazy, but as you get to any really elite trader, the really elite traders have incredible amounts of skew. They might be betting 10, 20% of their year on one play if it's one of the best plays of the year. So the way I always try to evaluate it is simply by being true to the expected value. Trading is essentially two things. One, can you accurately estimate expected value? Then two, if you're doing that, are you betting appropriately? So there's so many traders that have their playbook that they're good at and they bet appropriately on that, but then they have stocks and trades outside their playbook that they're still betting the same amount on. And then you end up being washed out, right? Because there's only so many really good plays. There might be like 3 or 5 really good plays a month. Do you know how many shitty plays there are a month? Hundreds. So all of a sudden, if I start betting an equal amount on everything, then I'm going to be negative. So many people might have edge in part of their system, but they're taking trades that they shouldn't be taking and they're betting the same amount on them. And that's where you just get totally wiped out.
All right, someone wants to know, what do you think about systematic trading?
Sure. So I think systematic trading can be awesome too. And the best part about systematic or even like algorithmic trading is you take the weakest part of most trading systems out, which is you, the human. And your algorithm doesn't FOMO, it doesn't rage trade, it doesn't overtrade. It only does explicitly what it's told. So I do think there's a different skill set involved, right? Most people doing more systematic, quantitative, algorithmic trading, you either have some programming knowledge, but it's becoming more accessible thanks to AI, and you definitely need some math knowledge. But I think the beauty of this is there's so many ways to succeed at markets. So when I was in Vegas for Traders for Cause, a trader reached out. We ended up golfing one of the days before the conference. And he's from Scandinavia and a just purely systematic trader. And he's able to take some of these same concepts that I talk about and apply them to his systems. And he's had a blowout amazing year. And I'm so happy for him, right? So it's totally viable. I think it's suited towards some people more than others, especially those with programming backgrounds, math backgrounds. But yeah, like there's tons of ways to succeed, and that's what makes this game so cool.
All right, somebody asked, how can you get good at grading the news?
Yep. And so a lot of what I did in my career was based on breaking news trading. And like anything, a lot of that can be systemized and studied and learned. And so the first step is anytime a stock is moving on news, you want to document it and build those databases. What's the headline? Why is the stock moving on it, right? So a company like Tesla is going to move for way different reasons and way different headlines than your average low float. And what you start to realize is a lot of news comes into different categories. It might be merger and acquisition news. It might be offering news. It might be stocks this year have been flying on being added to the S&P 500. It could be macroeconomic news. Like in Forex world, there's a lot of stuff in macro world that moves Forex. Or even in futures, the stuff in the Middle East, conflict in the Middle East was moving oil. Even for all the Chinese tickers in the Chinese market, that was government stimulus. So the first step is to be documenting all of it, trying to group all of it. And what you realize is there's kind of two things that you need to think about. Or is this piece of news going to be material to the share price? And then is this piece of news new? So a lot of times news can get rehashed and everything else. So that's where you want to be keeping really good records. You want to be staying really on top of what stocks are moving and why. So that's why as part of my daily routine, every pre-market, I wanted to know what the news was overnight. What stocks are moving, what stocks had earnings, did the Fed make any decisions? Also, I can know why everything's moving. So if some big headline comes out, I know the context of it. And the more you start to study and live in this space, you realize that some stocks have certain catalysts that are going to move them a lot, and you become more on top of what's going to move, how far. And as you collect data, let's say all of a sudden some drug is up 50 or some biotech is up 50% on a drug being effective. Then all of a sudden they do their phase 2 trial and the phase 2 trial bombs. It's not safe or it's not effective. Well, guess what? If you know that data point from phase 1 and the stock was up 50% and now phase 2 failed, you know that headline is going to move the stock a ton and it's just going to get crushed. And so a lot is just building that experience. So especially in real time, you can process these things, know the context, and act on them as fast as possible.
So if someone wanted to go back in history and do it, they could probably just look at the tickers that had the largest intraday moves
100%,
and then trace those back to catalysts.
And reverse engineering is so crucial because it costs nothing. You can go back in time, and most of the news, any big news, is also just on Google at this point, right? So of course, Google isn't a real-time news feed. You might need Bloomberg, Newswatch, NewsEdge, or any of the squawks out there and everything. But I can Google Tesla on XYZ date, and it's going to tell me what happened that day. I can Google, okay, why was Hershey's moving last week? Oh, it was an M&A story involving Mondelez. And you can go back and build out this database and just find, what were the big moves and what were the repeatable moves?
All right. So someone asked, what are some things that you do to prepare for the trading day?
Yep. And so I view trading as a performance activity. And I know it's not a sport or anything like that, but the same way you take some of those top athletes, you need to be on top of your game just like that. And a lot of that starts with sleep. All of my worst trading days were on days when I was either hungover, sick, tired, because all your decision making, your willpower, everything's worse. And so it really starts with doing what you need to do to get a good night's sleep, having a really good routine where you're focused, you're not distracted, your life's in order. And it really matters. Like the health stuff, the nutrition, the sleep. If you're getting hammered on a Wednesday night and you're expecting to trade your best on a Thursday, again, this game is too hard. Like you think any athlete can just show up hungover or like not do the work or not sleep well and perform their best? No. And it's no different for stock trading. And like, that's why it's always so silly, like this whole jet setting lifestyle and like partying and everything else. I'm like, look, have your fun on the weekends and everything else. Like I definitely had mine. But if you're trying to really perform and learn, you need to have everything optimized. And it's so funny because people that I encounter at these trading meetups, they'll brag to me like, oh yeah, I'm working as a side job, but then I'm hustling hard on trading. I only get 2-3 hours of sleep a night. Dude, you're scoring on your own goal. Like you can't learn and study these patterns. You can't make those connections if you're not getting enough sleep. If you're not healthy, if you're struggling, if you don't feel well, your brain works better when you're eating healthy, you're hitting the gym, you're getting outside, getting some sunlight. And so much of optimal performance to me is not just doing the work in the office, but then doing the work you need to do out of the office.
All right, man. Thank you so much, Lance. This was a pleasure. Second time around, we got to cover some of the concepts in greater depth. I really enjoyed this, and I think our audience will too. Lastly, what are some ways that you prefer people to reach out to you?
Sure. I mean, I think generally I'm most active on Twitter at @the1LanceB. All that's spelled out. And then, of course, got this course coming out, and I'm telling people before they start hating, check out the free version. It's all going to be at the1lanceb.com. It is going to blow people's minds and hopefully silence all the haters. But no, that would just be me being naive. But nevertheless, I truly hope tens of thousands of people end up using this, learning from it. No matter what you trade, futures, Forex, crypto, whatever, no matter what your style, your time frame, there is something that you're going to learn. There's something you're going to have an epiphany over. So check it out. Appreciate all the love from you, Abdullah, and being an amazing host. And always a pleasure hanging out.
All right. Thanks a lot, man.